All right, so at this very moment, you should have a clear understanding of how to draw your supply and demand and your support and resistance. We know we're supposed to draw support and resistance on the 1 hour, 15 minute, and 5 minute. And we have a clear understanding that the 15 minute and 5 minute is good for supply and demand. So once you get good at spotting your key levels, because that's the foundation of price action, is trading at key levels. Once we get a good clear of understanding that, now we have to reprice when it gets to the level. Okay. Now really look at what I have drawn up. Okay. All of these candles you are going to see when it gets to the level. Now, it's certain candlesticks that we look for before we get our entry candle. Now, let's look at this red candle right here. So this big red candle comes to our support or demand. Okay. When we see this, we should get excited. We should get excited because this is called an exhaustion candle. Okay. When an exhaustion candle gets to a key area, most traders are going to get out of the trade. Okay. Like whoever is selling, once they see that it's reaching a key level, they're going to get out the trade. Okay. So they're exiting the market. And this candle also scares a lot of traders too. Okay. Especially if they are in a buy and this big red candle comes to demand or support, they're going to get out of the trade. This candle scares a lot of people, but we love this candle. Okay. Once we see this candle, we're going to take the next available candle to go back up. Okay. Now, what do I mean by the next available candle? What I mean by the next available candle is whatever the next candle print, we're going to take it. We're going to buy once it breaks the high of that candle. So, for example, if this doji right here was the next candle after this candle print and then this candle print, we're going to get in for a buy once it breaks above this candle. Okay. We're going to get in for a buy. And our stop loss is going to be 1 pip below this candle or 1 tick below, depending on if you're trading futures. But yeah, that's basically it. But this candle scares a lot of traders because they see the momentum. They think that it's going to break through the support, and it's not. Okay. So these 4 candles, these are all entry candles right here for a demand entry or a support entry. You're going to see regular candles. It's not nothing extravagant. You're going to see regular candles like this. Once it starts pushing up, then you buy, or we get a doji break above, you buy. Now this candle right here, it tried to go up, but it wicked back down. Now this is a dangerous candle because if price decides to break below the low of this candle, you got a high chance of losing or getting stopped out. So this candle right here is really tricky. Okay, this is really tricky. We love this candle though. It come down, then shoot back up and close high. Once it break above this candle, we're getting in for the buy. So all we're doing is waiting for a price to get to the key area. And then once it starts breaking below of the candles, we get in. Okay, I mean breaking above, we get in as far as a support entry or a demand entry. Now, there is patterns that we look for. Okay, we're going to get to the patterns. I'm just showing y'all the entry candlesticks. Okay, so let me not show y'all that just yet. Okay, so right here, this is a supply entry or a resistance entry. Okay, just as the exhaustion candle go for the sell, there is exhaustion candles for the buy too. So sometimes the market will push up really fast to a key area, right? And most traders think it's going to be a breakout, or most traders get scared and they get out. We just wait and see what the candles print. So say the next candle prints this, we wait for this candle to break the low of that red candle, and we get in for the sell. Stop losses up here, 1 pip above, and we try to get a 1-to-1. Okay, just like I said with this candle, this is a candle that we do not want to really see. Now, I'm not saying that you're going to lose if this candle do appear in your key level, but we're so close to our stop loss and it's rejecting from going down, which we want it to go down. That's not good. Okay, so if it breaks above, high chance of hitting your stop loss. It is what it is. But yeah, all we're waiting for is we want to see some type of dojis at our key level, some type of candlesticks that's going to be slowing down. So we want to see a lot of wicks in our key areas. Okay, we want to see a lot of wicks. Sometimes you do get like engulfings, like this candle right here. Like it would be a regular red like doji, and then it would be like a big green candle. Then we get in at the top of that, or we get in at the low of this candle. So it just really depends on what price action, not price action, but candlesticks print. Nothing is guaranteed, but we get in on these full red candles too. So say if it's a tweezer, like I don't want to call these tweezers because I'm going to explain what these two actually how I actually look at these two candlestick patterns. But if it's a just like a regular just candle that's not really a pattern, say just like a regular green candle right here, and then this candle prints, but it doesn't breaks below. Let me do this. I'm gonna do this. I'm gonna delete this, right? And then I'm gonna drag this over. So say this candlestick pattern appears at your supply area or your resistance. This is, we're getting in once it breaks below this candle, the low of this candle. So say you did get an exhaustion candle that got to your key area, and then this candle prints. We're getting in for a sale when it breaks below. Stop loss is 1 pip above, and we aim for our 1-to-1, and we get our profits. So yeah, so that's basically all we're looking for when it comes to price action. I do want to talk about these two candles right here. I mean, this candlestick pattern. When you see this, when you see, matter of fact, let me draw this right here. When you see the market do this, now sometimes, I'm gonna say this before I go any further. Sometimes you will not, this pattern won't be at a key area. This will happen at the 9:30 to 9:45 candle for the New York Stock Exchange. Okay, these are where the fake outs happen. You will see this a lot. Right at 9:30, it will be a big momentum red candle, and then a green candle to wipe it out, basically. So it's like a wipeout type of candle. Okay, when you see that it basically cancels that red candle and goes back up, I will be getting in with that buy. Okay. Now this pattern does appear at key levels, so be aware of that. When you see it's shooting up real fast and then the next candle basically wipes out that green candle, we're gonna want to get in. Okay, you know what I'm saying? Stop loss is 1 pip above, and we're looking for our profits. Now, risk to reward. I want to say this real quick before I show the patterns. Risk to reward. We aim for 1-to-1 minimum. Okay, 1-to-1 risk to reward minimum. Okay, I'm gonna go into another video about risk to reward and how do I stack orders and hold trades longer. But I just want to say that we aim for 1-to-1 minimum. Okay, just want to say that. Now, here go the patterns that we look at. Okay, these are the patterns. Now, let's start up here. When we get to a key area, sometimes we might miss this first entry, okay? Because like this is an entry over here, but we might miss it. Now say it do a little pullback, but this pullback doesn't break the high of this area. We will be getting in once it break the low of these candles that's right here. Okay. Now this little illustration could be 4 candles. It could be 4 candles. It could be 3 candles. It just depends. But definitely if you see that it's creating like a higher low and it's at a support or a demand area, you're going to want to get in for the buy right here, have the stop loss under here. Y'all know how to do it, okay? Very simple stuff. People call these M's and W's, but yeah, these are basically M's and W's, but we can get in a little earlier before the M and W show up, so it's really up to you. If I do get in and it's not passing this previous, I might add another order. I'm going to show you again how I stack orders or twin trade when it comes to these type of setups, okay? But yeah, this is definitely a setup that I do use. Now, these two patterns are very powerful, okay? These two patterns are very powerful. Most of y'all probably are familiar with this, but if you're not, this is a head and shoulders pattern. This is a reversal pattern. So the market will shoot down very sharp and then shoot back up very sharp. There's basically this little V area. There's like a V. There's support right here, but it shoots up so fast that you kind of want to leave that where it's at. So if it does come back and we get the price action that we want to see some candles starting to break above. Once we get in this area, we'll be getting in for the buy. This is called an inverted head and shoulders, okay? Inverted head and shoulders, we look for buys, okay? We look for buys. I'm going to show illustrations, so don't even worry about it, okay? Now, regular head and shoulders is when the market shoots up really sharp, shoots back down really sharp, and then gets to this key area, because this was a key level that returned back to it, and we're going to be looking for sales up in this area, okay? Now, I want to just show this again so you guys can just really look at this, okay? This is what we're going to be looking for buys. We're going to be entering buys above these candles, these type of candles. Be careful with this candle, and I deleted the other candle, but be careful when it's rejected in the opposite direction. So if we're looking for buys, why is it rejecting to go up? This should be a full bar, or at least majority of the bar full. This is not good, you know. So yeah, we were looking for dojis and these type of candles as support. And when we have resistance, we're looking for these type of candles, full red candles, even dojis. We like dojis, but we don't like when they are like this. We don't like that when they're like that, and we're at a key resistance. We don't like that. Okay, I'm gonna make a part 2 to this video because this video is getting very long, and I want to show the examples of all of these setups. Okay, so let's get to the examples.